What's up, traders? This is Vee Trades, and today I'll be doing a technical analysis breakdown for the S&P 500 index with the ticker symbol SPX. If you want a chart analysis guaranteed to be done, please read the description below. Also, take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only, does not constitute any financial advice. I will first go over what I see in the daily chart and finish the video off with the weekly chart. Remember, guys, I reply to every comment, so I don't care what you comment down below, let's just keep the comment section full. So let's take a look at the daily chart for the S&P 500. Today was a bullish day. You can see that we opened pretty low, but we closed up pretty high on the price. The open for the price was at the 41.87 level, and then price action trended all the way up to the 42.60 level. So it's a bullish day. That's why the candle is green. However, in the grand scheme of things, this is still a downtrend, and it doesn't look over to me because we're still inside of this channel right here. So if I drag this down, you can see that this is the major pattern. Obviously, we had big reversals previously. Not just one day, we had several days of green days, but it still got rejected and we still continue lower. So one day doesn't really change that much, but we are going sideways for the past few days. You can see that we're stuck inside this consolidation pattern. We're going down, up, down, up, down, up. So we are pretty much at the bottom of the trend. So we could see a minor reversal, maybe a break outside of this range to the EMA, or even a break outside of this yellow channel. That would be a bullish sign, because then that would show signs of weakness in the downtrend. So let's just say we do get a reversal to the top side. Where can we go? We can probably reach that 43.83 level. And if we do get a second leg up from here, then where can we go? We can reach the 44.51 level. So there is this strong resistance in play because we did break below a strong support. However, it's not really confirmed. So this was a very strong support for the buyers at the $4,300 level. And then we broke below it with this massive red bar. And then the next day later, there was a massive green bar. We rallied up, but we cannot find any support. Then we broke down lower, and now we're trending and consolidating below this horizontal line, which is previous strong support. So that's not a good sign for the bulls. What we need to do is get back above that $4,300 level and defend it, and then maybe possibly make a reversal from there, making higher highs and higher lows. So that would be the bullish scenario. I don't know if it's going to play out like that. The volatility is still very high in this market, and any spark can pretty much create a wildfire. So I don't think this is the end for the S&P 500. I think we're going to probably come back down to retest this low at the $4,100 price level, but you never know in this market. So you can see that previously I'm looking at repeating patterns. This is very similar, where we had a huge sell-off. Let's go and make this red. So we had a huge sell-off right here. So I'm comparing it, the price action back here in September of last year and October of last year, and this looks very similar, where we had a huge sell-off. You can see with the red arrow I'm pointing at, and then we had a huge rally. Let's go and make this green. So we had a huge rally, very similar to what we had over here, and then we started selling off again, and then the next sell-off was lower than the previous low. Let's go and make this blue, and this is very similar, where we had this sell-off lower than the previous sell-off. So you can see that back here, this was the previous low, and then we exceeded it before seeing a huge reversal. This was a low, then we exceeded it before seeing a huge reversal. Even then, we also had a little consolidation, where we're getting right now. So let's go and make this purple, and this purple consolidation is also happening. So are we going to repeat the same pattern, where we go up a little bit and then we pull back and then we reverse strongly? It's a possibility. I'm not saying 100% this is the bottom, but I'm not saying 100% that we can trend up either. So I have to go with what the chart is telling me, and it doesn't look that bullish as right now. We're still below the EMA, we're still inside the yellow channel, and we're not really seeing any buyers step in. We're just consolidating, so it could go either way. I'm seeing possibly maybe a failed breakout on the top side of this consolidation pattern, just to trap in longs, and then they're probably gonna reverse the market strongly. So either way, I'm still looking at lower price targets. My target is at the $4,000 level, or the $400 level for the SPY. See, this is the measure move working down. This is the second impulse, so I think price action is trying to reach this $4,000 level, and it does make sense because there's a couple gaps over here that could be filled and a previous breakout level that we had not tested. So a lot of this makes sense, and that leads to confluence, and that just gives your prediction more bias. So that's what I'm seeing in the market. We're chopping sideways right now. The volatility is really high. I think we're going to get a failed breakout to the top side and then probably continue lower. We were very close to the bottom of this trend, so obviously it's more likely to see a pullback instead of just continuation. So that's everything I have on the daily chart. I'm going to show you guys something cool right now. So here we have the VIX, which is just the volatility indicator for the S&P 500. And whenever we have a numerical value that's high, that's just increased volatility in the market. If we have low volatility, and then you'll see lower numbers. So looks like the volatility is increasing because the EMA is kind of pointing up, and we do have this channel working higher. So it's a weak channel, but it's still a channel nonetheless. So this is what prices are respecting. It's not really price, it's just a numerical values. So if I zoom out on the chart, you can see that most of the time the average would be right around here, probably like the 20. We're right here at 29, so this is definitely increased volatility, and it looks like it's not stopping as right now. Maybe we could see a drop in volatility, but then it looks like it's probably going to pick up. So that's why I'm thinking we're going to get bigger swings in either up or down direction. So this will let me know that, hey, looks like the volatility is increasing, so I would be expecting bigger swings. And if I go to the weekly chart, you can see that most of the price bars are below this current level that we're currently at the $29 or 29 point level that we're currently at. Most of these price bars or candlestick bars are below this horizontal line. So you can say that the average is, we're pretty much above average right now. So you can see that back in 2020, we had a massive amount of volatility, and that's what this spike is right here. That was a massive amount of volatility. Eventually it tapered down and it cooled down before flattening out, and then it looks like we're kind of picking up the volatility again. So we'll have to wait and see what the market wants to do, but this tells you that, hey, we're kind of above average in volatility, so we could see larger swings coming in the next weeks or months. So let's go and wrap this up on the weekly chart for the SPX. Here's the weekly chart for SPX. You can see that previously this red candlestick pushed right through the EMA, so that shows a change in the market structure. We're starting to make lower lows, lower highs. However, we possibly could be due for a pullback because we are getting a lot really oversold, but the price action can also stay oversold for a long time. So if we do get a pullback, where can we go? Like I said before, we can probably come back to this EMA on the weekly chart, which is right around that $4,400 level. That's a maybe. We'll have to see if the market wants to get up that high, but if we do, we could be facing overhead resistance. Let me put a horizontal line. So it looks like there was strong support, probably possibly right around here, right in that 43-45 level. So maybe if you come back there, we could get rejected and then continue lower. So either way, I don't think this is the bottom, but I'm not saying a rally is out of the question either. We'll have to wait and see how the market develops, but I think there's just too much bearish sentiment across the market to just go back to all-time highs as of right now. So that's everything I have for the S&P 500. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel since you might be surprised what you can learn. Leave a comment down below on where you think prices are headed. Also share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel since I want to deliver great content to you guys. See you next time, and bye. If you guys like how I do my chart analysis on YouTube and you want to learn how to do it yourself, click the link below to check out the Vee Trades technical analysis course.